Did you know that the second best performing stock in the S&P 500 isn't Apple, it isn't Tesla, it isn't Amazon, it's a gold mining stock. And with that said, welcome to the first edition of the SF Weekly Show. I've yet to come up with a better name for it. It's the first time we're doing this. I really want to provide you with a weekly wrap-up episode. What have we been watching? What kind of news have been moving markets? What is gold doing? What is silver doing? And I'm trying to sprinkle in some mining news here as well. Today, I want to tell you about a stock I've bought this week. So lots to discuss, of course, and we're trying to keep this to about 20 minutes. If you enjoy this format, please leave a like, leave a comment, and subscribe to the channel. And we're always looking forward to constructive criticism. As I said, this is the first episode we're doing for our weekly wrap-up. What do you want to have discussed? What should we be looking at? What should we be discussing? Maybe suggest some mining stocks we should be taking a closer look at, and really curious to get your feedback here. So thanks so much for doing that. Now, without further ado, let's dive right in. Let's take a closer look at some of the economic data we've gotten this week. It's not that much. It was fairly quiet. News have been dictated by the FOMC or the Fed. We have the Jackson Hole Symposium going on right now in the U.S. What is it? Wyoming it is, and everybody's been super not excited is the wrong term, but people are waiting to hear the speech this afternoon. As I said, we're recording this on August 22nd around 11 a.m. my time, so we're about a few hours, 5-6 hours short or away from Powell's speech, and every single word is going to be weighted very, very carefully in regard to a September rate cut. But before I get closer or more into depth on the expected rate cut expectations here, quick note, we've got the Fed minutes from the last FOMC meeting, and I think that was really, really interesting because it showed how divided the Fed board is right now. And maybe I'll share this with you as well. It's just Jerome Powell, it is really divided about tariffs, inflation, and the labor market. I think there's an understanding within the board that the inflation might be going higher, but people are concerned about the employment side. So there's some dissidence about, or some discord about what should be the direction of the Fed. We have two Fed governors who already argued in favor of cutting just at the last meeting. Personally, and that's why we're doing this wrap-up, is really to share my own opinions. I think it's way too early to cut. And I'm not defending the Fed, but if I look at the data, why would they cut right now? Of course, political pressure is massive, and I've mentioned that in interviews throughout this week. But inflation is stable, 3%. It's not crazy. Of course, you look at shadow stats, you look at underlying inflation data, but the official data, the data the Fed uses, is stable. Employment is stable. Fed is inflation is maybe even ticking up. So why would you cut into this environment? It's very difficult to understand. Of course, there are very different economic theses to that, but it doesn't make any sense right now. I'm almost, I wouldn't say convinced that the Fed shouldn't cut, but it's really hard to argue from a very pragmatic point of view why that should be the case. Couple of things, despite objection from two Fed governors, they still argued in favor of cutting. Quite a few more details. Waller and Michelle Bowman just said that they would be cutting in favor. We've got some more news that one of the other Fed presidents is being pressured to potentially resign due to falsifying apparently some loan documents. We'll see how that takes shape. We're waiting for the confirmation of Stephen Mirren as well as a new Fed president, so to balance out the board or just add more pressure on Jerome Powell on the board. So that's been going on. And just before that, we've also just a bit of mention here of the Bureau of Labor Statistics as well, which has been interesting. E.J. Antony, we had here on the program only in June, has been nominated to be the new BLS head of BLS. So we'll see if he gets confirmed. So lots of moving parts on the data side. Really curious. Let's take a closer look now at the market expectations, because I remember it being almost 100% in favor of a Fed cut. Let's take a look at the September data here. Let me share the screen, and let's see how that's changed. We're down to 71%, and the Fed minutes added to that downward pressure on the Fed cut. 29% almost expectation of no cut now, and I'm starting to lean that way. Remember, only a few weeks ago, we were at, a week ago, it was 85%, and now we're down to 71. So Fed cut expectations have changed. We'll see where that goes. Now, Fed is, of course, one thing. We'll have to see what Jerome Powell says in Jackson Hole this afternoon as he speaks. Of course, this whole video could be obsolete if he says, well, we're definitely going to cut and this is what we're going to do. But don't bet on it. Don't be too excited about those Fed cuts. If you're a retail investor, like, what do you expect the outcome to be? Mortgages to be cheaper? Well, it didn't happen last time. We're still at the same level. And it takes some time for the Fed cuts to trickle down. A 25 basis point cut won't do much. And if you know there'll be further cuts coming, why would you spend money right now? So you're just deferring, and maybe it's part of the deflation equation. I've been saying that before, that this is not a very positive trend. Like, why would you invest or buy something at 4 and 4.25 when you know you can get it for 3.5 or maybe even 3% later on? So that's something to mull over, and I think the market is a little too far ahead of itself when it comes to that. So that's that. Yeah, Fed is the big news this week. That's why I'm spending most of the time on the Fed here this morning recording. But I think other news we need to take a closer look at is on the geopolitical side. And what I want to share here is a development. Of course, you've all been following the Russia-Ukraine situation. But one development, in my opinion, that has been a little overlooked is the fact that Russia suggested that China become a security guarantor in the Ukraine, maybe even move troops there. It has been denied by China already, but it's an interesting move because it shows the fractions that are being established here, and the sides are being very, very very visible now. We'll see where this goes. There are rumors, ceasefire, peace talks, maybe a meeting between Putin, Zelensky, and Trump in the near future. We'll see. No dates have been set, nothing. So we'll have to see whether it's just headline news, or whether it's just hot air, or whether there's more substance to it. It is something we're definitely closely monitoring because it weighs on what we're ultimately looking at is gold. A Fed cut would be positive for gold. Geopolitical safe haven demand. I hate to say it, but war is good for the gold price in general. It doesn't mean that I'm all for it. It's a bit of an ethical dilemma because we stand to profit from war when it comes to that, because that safe haven demand pushes gold prices higher typically. Two-edged sword here, and it's a moral and ethical dilemma that I'm facing here as well, because nobody wants war. Let's be honest here. On the geopolitical front, other note I've taken, I'll get to that maybe in the commodity section when we talk about the commodity prices, but there have been some suspensions on the mining front in China when it comes to lithium. We all know that China and the U.S. have been arguing and fighting over rare earths and other critical minerals, so that has some interesting implications because the price of lithium moved, and I'll get back to that in a second. Now, let's take a quick look at some of the equity charts out there. Let's take a quick look at the S&P 500, how that has been developing, and let me just clean this up here real quick before I share it with you. Let's take a look here. The S&P 500, 63.86, fairly flat in the month of August. I just read somewhere that this is the weakest month of August ever, or in the longest time. Personally, I think the stock market is still well overhyped. Everybody is pricing in rate cut expectations here, although we can tell just the last few days here, if you look at the chart, in my opinion, maybe some of those expectations have been seizing or have been priced out of the market. So we'll see where that goes in that regard. But I think personally, the S&P 500 is still way overpriced. We're in a bubble. But again, where are you going to put your money? It's the easiest way to park your money. With that said, let me add another really interesting fact here to this chart, and it's the stock I mentioned in the beginning. Like, it's the second best performing stock in the S&P 500 so far this year, and it's Newmont Mining. 82% so far year-to-date performance. S&P 500 up 8.7%, so massive outperformance, and it's only being bested by Palantir. Here, I haven't shared my screen here. Let's do that real quick. I want to show this. As I said, like, this is the first time we're recording this, so please be patient with us while we're trying to figure out some of the kinks in the system. And if one of you knows how we can get the percentages bigger in TradingView, please comment down below. I'm looking for that input. I've been playing with this for 15 minutes and just gave up. But that outperformance in Newmont has been impressive, especially after Newmont announced their quarterly financials. You can see the bump in the chart. Let me move my mouse over here. You can see this really nice increase in the move, especially outperforming the S&P 500. Because record free cash flow, $1.7 billion, and very strong gold production, and lower AISC, all-in sustaining cost, which is fantastic. That's what we want to see, meaning margin expansion. Question is now, what is Newmont going to do with the free cash that they have on hand? We'll figure that out together, I guess. I'm personally in the growth department. I want them to buy something. I don't care too much about dividends, personally. I've been told this week that I'm maybe too young to look at value. I should be looking more at growth, but in the mining space, I want growth. I'm not too keen on just value. Let's take one of the stocks. Like I wanted to show you in comparison, or not comparison. Sorry, it's a bit of a hot stock. And it's been discussed, and it's a stock that has broken out finally. It's Barrick Gold, trading at about $25 here on the NYSE and $25.50. And if you look at the chart, the market is waking up to Barrick. I've been always negative towards Barrick in recent months. One issue I've had with Barrick is the branding situation. Is it a gold company? Is it a copper company? Is it an industrial metals company? They answered that for me by just changing their name. It's now just Barrick or Barrick Mining. It used to be Barrick Gold, so they've definitely rebranded. And one thing that was interesting, they got rid of the gold ticker. They had the ticker AU in New York. Personally, I really like that ticker, but they went down to just a B. And since then, the stock has completely exploded. Somebody needs to explain that to me, why the psychology has completely changed. Of course, I think the market is catching on to the fact that the margins are generally expanding. Q2 production was up close to 800,000 ounces. All-in sustaining costs down to about $1,700 an ounce. So the margins are about $1,600 here for Barrick. Shares up 50% year to date, which is a nice move, but it's still lagging behind a Newmont, Agnico, and maybe some of the others as well. But we are seeing a re-rating. We've just added to Barrick in our fund, the Markuss Resource Fund as well this week, just built on that position because we think that trend is going to continue. Perfect. I think that's it on that front. Let's take a closer look at the precious metals. Let's take a closer look at gold. 33.30 as we speak here on Friday morning. You can see in the chart, like pretty much since May, the stock has been moving sideways. It's lacking impulse. It's been trending between, what is it now, 32.80 and about 3,400. It's been caught in that range. It is lacking in impulse. I've been asked this week to give a price forecast, and I'm struggling with that because I'm lacking impulses. Is it going to be the geopolitical front? Is it going to be what Jerome Powell maybe says in about 5 hours' time? Your guess is as good as mine, quite honestly. I think we're still in an uptrend. Gold has been super steady. I think all the news, all the geopolitical news, all the macroeconomic news point towards higher gold prices, but it needs a trigger. Whether that is from the geopolitical side, maybe something happening in the Middle East, maybe something happening in Russia and Ukraine, positive, negative. Those could be all influences that I'm looking at, but we need to break out of this. I think Markuss Bussler said in his show on DEUTSCHE that in a bull market, usually breakouts happen to the upside. So I hope he's right, because I wouldn't mind seeing gold back at 3,500, and the miners have just started to perform. And even if we stay at this price level, quite honestly, I'm really happy with $3,300 right now because the margins are expanding. I look at some of the forecasts for the producers, and the prices, the all-in sustaining costs, so their production costs per ounce, are trending slightly lower or remain steady, which is fantastic for margins. And I think investors are starting to understand that an outperformance is possible in the mining space. Let's take a look at silver as well. It has outperformed a little better. It caught up. It's only recently moved sort of into that sideways trend. Also waiting for a bit of a an impulse here as well. Of course, it is following gold. Maybe we'll take a closer look at the gold and silver ratio here. It has come down significantly. Let's look at the year to date, or even the 5 years, more fun. It has come back to, normal is the wrong term, but it has come down to a more normal level. I think we all can agree that 102 gold-silver ratio was not feasible, that something had to give, and of course, silver caught up to it, which has been fantastic to see. $38. As I said, now we're consolidating at this level. Let's just zoom in here. Again, I'm not a technical analyst. I'm not going to draw some trendy or some funky triangles here on this chart. I'm looking at a sideways move. We're missing an impulse. Silver is also affected by industrial news, so we'll have to see what the recession front will bring. CNN recently brought up that we might slowly entering potential recession territory that we've been forecasting for the last 3 years. So we'll see where that goes, because silver still reacts to industrial news like that, and we just have to keep that in mind. To really break out, I really want to see the $40 break here on the silver chart. But in the meantime, $38 is great. A lot of producers are producing around $22 right now, so $16 margins. Exaggerating a little bit because that's not the quarterly average, but a margin of $16 per ounce, that's fantastic. So maybe since we have 1 minute, I want to spend that on copper real quick. Doesn't mean I'll explain copper. I even haven't prepared it here. Let me just bring that up. Just take a look at the copper futures real quick. Massive tariff impact here on copper. Almost $5.80 per pound. It's dropped to $4.40. I don't see it recovering just yet. We're seeing quite a bit of news from the copper front. The White House meeting with big mining executives Mike Henry from BHP and also Jakob Stausholm from Rio Tinto earlier this week to discuss the Resolution mine, or the potential Resolution copper mine in Arizona, and what the impact might be. We're still waiting for some of the outcome. The CEOs both posted on their social feed or social media feeds about the meeting, but we're still waiting for statements from the White House in that regard. So we'll see what the impact here is. It's still massively in demand. I think the supply-demand story behind copper is still intact, so we don't have to worry too much. But right now, again, waiting for a bit of an impulse here. Looking through my notes, I've got a couple other topics I want to show you. I want to highlight, maybe it's the hot stock of the week. Maybe I need a jingle or something that we can play. And it's a company I've actually visited back in 2016 or 17 for the first time, and it's Osisko Development. I've been taking a closer look at this story throughout the week, and we've added to it in our fund. So we just bought recently at about $3.40. Maybe let me bring that up here in the chart just to show you what I'm talking about. Let's go year to date. Let's share this tab. So the story has been in an uptrend. I think people were starting to get convinced about the production profile here of ODEF, Osisko Development. But one thing, and that was the trigger for me to jump into this story this week, was that they have announced a financing, or they announced and closed the financing within a very short time frame, which was fantastic to see. And now the project is financially de-risked, in my opinion. I'm looking forward to a meeting with the team, by the way, in Beaver Creek in a couple of weeks. Osisko Development secured a $450 million financing facility back in July. It announced a $195 million financing that was upsized to $203 million US dollars. So the biggest factor for me, the financing side, has been taken care of. Now the story can develop, they can start building, and usually we see re-rates happening during a build phase. Let me show you one chart, maybe just as an example, how that could look, what that could look like, that re-rating when a company is in the build mode and really starts ramping up. And it is here. Can you see that? Yeah, it's Montage Gold. Is a story I personally own as well, full disclaimer. But you can really see that production re-rate, or going into production re-rates. The stock has run from $1.80 to now $5.37 here just in a 1 year's time. And that is the re-rating that we're, of course, chasing here with Osisko Development as well. Not financial advice. Do your own homework and do due diligence when it comes to that. But I wanted to flag that because that's stuff we're looking at for our fund. And with that said, I think I'm going to wrap it up here for the first weekly wrap-up session here on the SF Weekly Show. If you have some good name suggestions, suggestions for the show, let me know. I really want to do this on a weekly basis. We'll see if it's feasible when I'm traveling. I'll be doing a few site visits in September. I'll be going to the Precious Metals Summit in Beaver Creek mid-September as well. But if you enjoyed this, please let us know. Put a like, put a comment down below, and we will adjust. We will get better. We will practice. Still felt a bit clunky, and really appreciate you watching. Thanks so much for tuning in, and have a great weekend.